Hello and welcome. We have now Diös and the CEO of Knut Rost with us. Just to give you a heads up, we also had this recorded in the morning, but there was a bit of disturbance in the volume and noise. So we actually do a new one session here today. So if you really want to learn about Diös, I think this is an excellent opportunity. So I hand over the word to you, Knut, and welcome.
Thank you very much and good day to everyone. Welcome to this presentation of Diös Fastigheter. My name is Knut Rost. I'm the CEO and have been with the company since 2014. I'm going to give you a brief introduction of Diös and our market, followed by comments on the current situation, ongoing trends, and the latest results. I will then summarize why you should invest in Diös. If you have any questions, there will be a Q&A session in the end, or you can always reach us on mail or phone. Details are on the last page of these presentations or on our website. Turn to page 2. We are the market-leading real estate company in all our 10 cities. We have property value of approximately 24 billion Swedish crowns, 335 properties as end of September, and approximately 1.5 million square meter leasable area. Our main focus is within offices, which comprise 53% of the portfolio, but we also have a good spread of premises in residentials, urban service, logistics, education, and healthcare. We have a clear concentration towards CBD location and properties with high yield and attractive features, like the last acquisition Flottarbyn in Umeå. Our market-leading position, CBD focus, and great mix of premises make us perfectly suited to create value. We have a great diversification regarding geography, number of tenants, and type of premises. We have all our exposure towards 10 regional cities with growth. We have chosen these cities because they have great universities, a close cooperation between business industry and local authorities. They have ambitions to grow further and to have and maintain a good infrastructure. We have local team in each city, making us very close to the market, which is a key difference compared to many of our competitors. Since the start in 2005, we have had a great development, growing income from property management by 10% on average. We now have 3 areas of revenues: property management, project development, and transactions, which gives a new dimension. Let's go to page 3. It has been a turbulent year, and when COVID-19 hit the market, we got a new reality to manage. We have been successful in navigating in this new circumstance by living very close to our tenants. Value changes have been positive during 2020 concerning offices and residentials. Yields are lower today than in the beginning of the year, which shows our strong market. Retail values has been negative due to lower expected rental level. There is a trend within offices that has been going on for some time, that location, design, flexibility is key factors for tenants, from both private sector as well as from the public sector. Your office is a meeting place, an important element to recruit and retain employees, and a place that should be inspiring and create innovation and growth. Something that I think we all have seen during the pandemic is that the lack of physical meetings affects the creativity. Residential have a steady demand, and what is increasing is the demand for even more centrally located apartments with more floor area. We talk more and more about a 10-minute city. Everything, school, preschool, grocery store, gym, work, should all be within 10 minutes from your home. That makes us want to put even larger share of disposable income on your rent. While high street retail facing headwind right now, I'm convinced that retail is one of the key elements for the city centers now and in the future. Of course, it will change and needs to adapt new demand. but a lot has already been put into motion, and the pandemic has accelerated the speed of change. The regional cities are winners concerning all these trends and changes in demand. We have only one city center in each city where we are a major property owner. Due to the size of our cities, we do not have the issues with crowding local transportation like in Stockholm or London. We have many benefits in our cities like well-developed infrastructure, affordable land and housing, great environment, outdoor activities, and so forth. Many features that are requested today. As an evidence of the strong market, you saw our net letting for the interim period amounted to 42 million Swedish crowns. Many other Swedish real estate companies presented negative figures. As a result of increased efficiency within the operation and on the energy side, we presented the highest ever surplus ratio, 68%. It shows our investments and measures creates a property portfolio of higher quality. Let's turn to page 4. We are not only a well-diversified real estate company looking at the portfolio, but we have also great diversification in our value creation. We have a target of growing the income from property management per share by 10% per year on average over a 3-year period. We will reach our target by contribution from all 3 sections. First of all, property management. We target lower vacancies for coming years. We have very good traction in our new leasing. A percentage point in reduced vacancies give approximately 20 million in additional income. Renegotiation has a great potential. 16% of our lease contracts are up for renegotiation next year, and especially office rents have been on the rise last couple of years. And then we have the project developments. We have 6 ongoing projects and more to come, each with an investment volume exceeding 100 million Swedish crown and a total just now of 2.2 billion. The first to be finalized are the residential in Östersund, where new tenants are moving in as we speak. It gives a cash flow of approximately 7 million on a yearly basis. The majority of the cash flow from these projects will come in 2022. We are putting more focus into how to activate our building rights. We have approximately 170,000 square meters building rights unused or in early stages, and we are exploring possibilities to create value by divesting or by starting constructions. And then we have transactions. Increased activity within transactions will help us reach our growth target. By acquire right-yielding properties within offices, residentials, and with government-related tenants, we can maintain our yield gap in the portfolio. The focus will not only be in the CBD location, but we will also focus on finding locations that are attractive for the tenants. By divesting properties with limited potential or outside our main expertise, we free resources. Our goal is to be net buyers for the years to come. Let's go to page 5. As you can see, we have a low tenant concentration risk. Our 10 largest tenants account for about 16% of total rents. 78% of the rental income from our 10 largest tenants comes from public-related tenants. 31% of our total rental income comes from tax-financed operations. The average lease duration in the end of Q3 was approximately 4 years. We are, as I said before, well diversified with relatively low exposure to exposed sectors, but there is a great uncertainty in how long the spread of infection will continue and what the long-term economic effects will be. Go to page 6. Our loan-to-value ratio at the end of the period was 55.2%. The difference is due to increased lending to finance our ongoing developments. The interest coverage ratio is among the strongest in the sector, about 6 times. It clearly shows the strong cash flow from operation and the low interest rate. Our net debt EBITDA is stable over time and amounts to 11.5 times. This is clearly below the average for the listed Swedish real estate companies, and again shows our strong cash flow. We have a clear ambition to prolong both the loan duration and the fixed rate terms. Due to very attractive conditions, we foresee that this can be executed without affecting the average interest rate so much. The timing is right. Go to page 7. There is a clear trend that investment volume has increased in recent years. We become a more complete real estate company as we also add new production to future earnings and cash flow. We currently have about 100,000 square meters under production with an investment volume of about 2.2 billion. The positive cash flow effect will mainly come during 2022 and 2023, which always will have a positive impact on other key operating figures. Let's go to page 8. On this slide, you can see 6 of our major ongoing new productions. Worth noting is that 50% is pre-let to public tenants, marked with a pink symbol. None of these projects have any elements of speculation. They are all 100% pre-let. The residentials in Östersund are about to be finalized as we speak. It will add 7 million to our operating surplus. The big lift will be 2022 and 2023, where developments adding 80 million to our surplus ratio will be completed. Let's go to page 9. To summarize and conclude why you should invest in Diös. We are in a unique position. Being the market leader in CBD location with our local teams, we take advantage of the underlying growth in our cities and create growth by ourselves. We own and manage properties with an average yield of close to 6%. With our low interest rate, we have one of the largest yield gap in the sector. We have a great diversification among our tenants. 31% of rental income come from public-related tenants, 8% from residential, making the revenue streams very stable. We have now 3 streams of revenues: property management, project development, and transactions, creating stability and also many synergies and possibilities. We target to be net buyers of property coming years. At last but not least, we have our project portfolio that will not only create economic value for us in the coming years, it will also help the cities to grow and make them even more attractive. Thank you for listening and have a good day.
Thank you, Knut.
Okay.
Yes, I have some questions for you. We can start off, as you said, you're a very stable company. You have your exposure is towards public rentals in general, and you have a loan to value that is around 55%. You've been up to 70 in the past. Is that the level you want to have in the future, or do you see opportunities now to increase that level, perhaps through acquisitions, or can you give a bit of flavor on that?
Yeah, we have a very strong cash flow that gives us possibilities to grow without extending the loan. So I think I'm convinced that we will be around 55% or lower. I think that's a good figure to be around. So we have no thoughts of going higher. No. Mm.
You mentioned something. You have this conversion have done for the Tele2 3,800 square meters, going from retail to office space. Is that you think will continue also forward for you as a company, part of a structural trend?
Yes, I know that's a typical trend that we convert B or C location for retail to A++ location for office. And talking about this Tele2 tenant, it was exactly what happens. So that is a sort of symbolic business we've made with Tele2, and we have more to come. You'll see in a few weeks.
Okay, sounds interesting. I need to ask this, and it has been a very hot topic. Office space, as you said, you have maybe a slightly different exposure because most of your counterparts are public. But can you give your view of what happened this year when it comes to the corona situation, the digitalization, and the feeling you get when you talk to your counterparts, and what kind of impact that could have for you as a company, maybe in the mid to long term?
We have a very strong trend in our 10 cities, and I think it's the same in all regional cities in Sweden. We can see that we don't have the commuting problem you have in the bigger cities. The density of people makes our regional cities sort of high-profile cities. It's no problem going in and out of your office here, and we see actually a demand for high-profile office in our cities, but you have to work with design. You have to work with what sort of premises you are offering. I mean, it's more like you offer premises for meetings. You can work in a cafe in the future. You can work at home. You can work at the office. But we can see that the creativity and activity in a company is growing much stronger in an office. So we see an increased demand for that.
And then a final question. When you had your presentation here, you talked about the 10 cities, 10 minutes. You have been very much focused on the mid to northern part of Sweden. Will that be the core of Diös also for the long run? Is that your edge of being focused on that segment, or could we expect some new moves to other areas in the future?
Yeah, in the future maybe, but not just now. I'm often having this question about new cities. Why aren't you coming to our city? You are good in working with city development. But I say we have so many possibilities, so many opportunities, and so much left to do in our 10 cities. And I believe, I've been in the business for 35 years. You have to know what you are doing. You have to know your market. So we are still in those 10 cities, but in the future, you never know.
No, we never know. Thank you much, Knut, for this presentation, and I wish you a nice day.
Thank you very much. Bye-bye.